Okay, so this is just a simple test just to see what this part looks like. We're testing one, two, three, testing one, two, three. Because the idea is I want it not to distract. I feel like there's no way I can fix this part right here. But my main focus is I'm trying to do it in a way where it's not too distracting for the audience. And I need to speak to the mic. So I've done some adjustments. I had to watch a YouTube video that hopefully fixes this issue. I'd rather keep it like around here so the audio is sounding crispy. And with that being said, I'm just going to go move it over to my YouTube channel so I can test it out and see what kind of quality we're getting. Hopefully, this sounds good for you guys. Let me know what you think. If it does, that's a huge win for me today because this audio stuff sucks. Oh, man. Let's see. Uh-huh. Let me press play. So I'm going to switch back to the normal look. Okay. So I'm looking okay at the moment. It seems good, which is nice. Now, what I want to focus on is I need to go and start to test out the top step stuff. So I'm going to have to clear out a few things. I do like it around here, so that way it's not too visually distracting. The only issue is it's always going to be on a tilt, which I don't like. But I really like the arm. The arm is really good. This boom mic, it's nice. So I don't want to like have to get a whole new boom arm just because of it not being completely vertical. Yeah, so I'm going to be occasionally stopping just to see what's going on in terms of the audio quality. I'm keeping the audio right next to it so that way I'm not shifting around too much. So the audio is very, very clear. And what I'm going to do now is I'm just going to log into Topstep. So when it comes to this, I have to click share screen. Come on, buddy. And we're going to go to Topstep X, share. And now you kind of, oh, I'm not supposed to show that. All right. Either way. Bam. Boom, boom, bam, bam, boom, boom. So now when I'm looking at it, okay. So as of right now on the live stream, you should be seeing that I'm on my Topstep account. So I'm gonna check on the other video just to make sure that it's showing the Topstep stuff. So here, I'm gonna move it to live. So I'm noticing even with this recording, when I switched over from my main screen to the Topstep screen, it went black. Whoa, it went black completely, and I was kind of concerned. Okay, so I'm on my Topstep screen right now. Just want to move it around just to kind of see what it looks like. Okay, all right. Think I'm in sync now. So let's dive into this. All right. Now I'm going to switch to this new tab. I want to see what that looks like. So here we go. Take a look at this stream. It's very good at this moment. It didn't just turn black for like so many seconds. So that's an improvement. Now I'm going to try to switch back to the top step screen. Here we go. Three, two, one. Okay, I think we're pretty good. Now, what I want to do is we're going to just jump into the top step stuff, or technically the trading view, do a little chart analysis, and I'm just going to do my best to explain the process. Okay. All right. Switching to top step X. Oh, actually, switching to trading view. All right. So what I'm doing right now is I'm looking through the chart. Now, my special strategy that I use is known as the CRT model. So I'm just going to take a look at one example of the CRT, how it looks like, and how it works. So I'm going to take this. You'll see candle A, B, C. If we were to use the replay mode, I'm going to click continue. Oh my gosh. Let me exit that. I should have said start new. Let me say yes. And that was such a clean play. One sec. Oh man, why did I do that? That was so not cool. Let's see. How in the world did I switch to the Japanese yen? All right, here we go. Let's focus in on this. So replay mode again. Start anew. Bam. This is just to kind of give you a simple visual before I get into the super technicals of this. This is candle one. This is candle two. I'm going to draw a nice little box. Whenever you see a formation like this is known as the CRT model, specifically a bearish CRT. The reason why it's bearish is at some point in time, price started from here, went all the way here. In the next hour, price shot up, but the sellers were able to push the price all the way down here. The buyers resisted, but then it closed up to here. Whenever you see this sequence, a good chunk of the time, it will typically complete the sequence. Now, of course, there are many factors to consider, such as volume, momentum, news. But from a technical perspective, whenever I see this combo, the third, fourth, fifth hour has a high probability to sweep, well, to reach this zone right here. And the reason why is this candle that you see has two forms of liquidity. The top is known as buy side liquidity, which represents the people who are trying to short the hour. And the bottom has sell side liquidity, which represents the buyers who are trying to long the next hour. With this candle, it already shows me it has swept the top. So from a technical standpoint, using smart money concept, it will most likely drop all the way down. Now, the way I personally like to do it is there are going to have to be a lot of factors in place. So let me just complete this play. This would be considered a counter trend move for me to take, but the concept should still be the same. One, two, three. I'm going to draw a vertical line here, and I'm going to draw another vertical line here. Now you might be wondering, why is he drawing lines on this three candle sequence? I want to explain. Basically, there's a concept known as accumulation, manipulation, and distribution. That concept applies at all various time frames, all different sequences. But the benefit of doing it based on this hourly model that I use is it helps to standardize that sequence. Candle one, any candle that you see here can be what I like to call an accumulation hour, meaning there's a ton of buy orders here, sell orders here, ton of buy orders here, sell orders here, tons of buy orders here, sell orders here, or shoot, buy and sell. That's basically it. When you establish that, I like to call that the A or the accumulation hour. Now, for the manipulation hour, it will always be the next hour over. So if this is 8 o'clock as your accumulation, your manipulation hour will always be from 9 to 10. If this is your accumulation hour, then your manipulation hour is going to be from 7 to 8. Always remember that little sequence. Now, once this is settled, we're going to go to the 5 minute time frame. And in the 5 minute time frame, all I'm really trying to do is this. This is the high of the 8 o'clock hour. Always remember, whenever you're on the 5 minute time frame, the hour will always end at a 55. So if it's 8 o'clock hour, 8:55, 7 o'clock or 9 o'clock hour, 9:55. All I'm doing is when this part is swept, I'm looking for a bearish 5 minute fair value gap. Kind of looks like this, right? Now, the theory is very simple. You have two choices. If you want to set a limit order, you can set a limit order right here where you see this fair value gap form. You wait for a tap and you go all the way down. But in my years of experience, I've noticed that before price goes to the opposing liquidity zone, which in this case is moving from a buy side liquidity, aka buy stops, to sell side liquidity, where you are going to have sell stops, it will typically fill this gap that you see here. This has been such a big breakthrough for me because it helps me to get better risk to reward above anyone else trading this strategy. So if you did it the standard way, you'd have gotten 1.62. The benefit of that is, you get a 1.62 R, which is nice. It's cool. You know, clap, 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 clap. But you can be able to literally be patient enough, move your entry from here to here, and you've just increased it to 3.45. I'm telling you, you can literally backtest this and you'll start to see this consistent pattern. It's never perfect, but at least it happens a good chunk of the time. When it feels that 5 minute, it will go to the opposing liquidity on this accumulation hour. So it goes, you enter, and then you go all the way down. Now, stop loss placement with this strategy is very crystal clear. When you're trying to short, it needs to be the highest swing that you see during the manipulation hour, which is this red candle right here. And your target will always be the opposing, what is this here? The opposing liquidity on the accumulation hour. So it goes in, boom, you make your money. Now I know it might seem, oh, this is just coincidental. Trust me, bro. I've been doing this for quite some time. Let me actually just show you some real rock solid stats of what I've been doing past week. I'm going to show you on my trading view. I'm going over here. I'm going to share this tab. Give me a minute. So here's an example of what I've been doing. If you take a look at my playbook settings, you'll see that I've taken about 25 trades using the bullish 1 hour CRT. Now I did use like a different variation of it like in the past, but honestly it's kind of the same thing. I'll take a look at even let's see. Let's even just take this trade here. Very simple concept. Now this I did on copper. I have it kind of like this just for simplicity's sake because I would have to go and recreate the whole sequence on TradingView, and I just don't have the time. So what I'm gonna do is I'm gonna go through my Tradzella notes. Let me open this image in a new tab. We're going to share the tab, and I'm gonna have to go back and forth here and there. One sec. So the red candle that you see, that is the 8 p.m. Eastern accumulation hour. There are a few things going on in here that are very important for this narrative, as people like to call it. First thing, any hour above the 50 EMA on the 1 hour time frame tends to have a bullish directional bias. Now, when it comes to using the CRT, if you want to have a like to take a long position, you have to patiently wait for the sell side to liquidity or the bottom of the accumulation hour to be first swept. So this checks out step one. Step two is you'll see this right here known as the 1 hour bullish SARS dots. Think of the SARS dots like the MACD. It helps you to kind of gauge momentum with it. Now, the reason why I specifically use the SARS dots is, in my opinion, it tends to give me much more clear momentum signals that I'm personally look for that align with the CRT model. So that's why I use that. Whenever you see the dots below any of these hours, just know it has bullish momentum. Whenever you see these dots above your hours, it has bearish momentum. So that's his first setup. The goal is because the manipulation hour was able to close within the accumulation hourly range. This combined with all these bullish factors, such as the 50 EMA being above it, and also the SARS dots, which is showing bullish momentum, there's a good chance that it will continue all the way to the finish line, which is going to be the top of the box, better known as buy side liquidity zone. Okay. Now we are going to switch back to the notes. So here we go. And now this is the overall play. So let me open that image in a new tab. Share this tab instead. Now this is a nice clear breakdown of the strategy. So this is the 8 o'clock hourly candle. And this is the next hour over. As I've mentioned before, every time you choose your accumulation hour, just know you need to create two vertical lines that show the next hour, which I like to call the manipulation hour. Here, after it swept that buy side liquidity, it formed a bullish fair value gap. And then what I did is I had a late entry. I didn't get a chance to see it. And the reason why I purposely waited just a little bit is I wanted to make sure that the last candle on 9:55 at least closed above the this zone right here. So whenever you have a candle that is closing above here, like you see how this is closed above, that means that when you look at it on the hourly time frame, that will form basically like a candle that's closed within the range, and that's all I'm really trying to do. So this last one, the 8:55, closed well inside of the range, which means there's a high chance it will go up and completes the two part of that bullet CRT model. So the way it works is since it's already filled, I had to essentially put I believe it was like a buy limit order right here, set my stop all the way to the manipulation hour, and then I let that ride all the way up. You see, this is a literal pattern that the market exhibits. Now, it's never perfect, but bro, one benefit of this system is it allows me to catch high RR trades. So I'm going to switch to my trading view so you can see it. Sharing this tab. If you take a look at it, this is real. This is not fake. This is my real Express account. See that? You can see even the numbers. You see this right here, this average win, average loss. You see that 3.82? The reason why I'm getting those kind of high numbers is because I'm using this strategy, bro. It is really good. And when you are doing it, even though the win rate is lackluster, the win and average loss is so worth it because it's helping me to catch, or keep or maintain a high profit factor without the stress of having to be right all the time. The same thing is over here. Obviously, I'm copy trading this. Same thing, 3.61. Right now, the profit factor is 2.48, even though the win rate is low. But you're still making a lot of money. This is a very simple strategy. I just wish the market could provide me with a live example so I could show you guys. It's just, promise you, man, when I'm doing this, you'll see, man. You'll see these crazy moves, these crazy plays, because I've actually traded some pretty crazy moves. So, and I have some little hot sauce to even take it to the next level, but I'm gonna save that just for later in the future. But as for right now, that's kind of how all this works. This is just a simple test stream just to see how it works. And yeah, I think this was a good test stream.